Chinese miners block mainland IP access as Beijing's purge intensifies. China's struggle with Bitcoin, BTC, miners appears set to rumble on, as two Chinese players move to restrict access from mainland Chinese IP addresses, and one of the biggest mining hotspots in the country making ominous statements about mining shutdowns. BitDeer, a mining group established by the Bitmain co-founder Jihan Wu earlier this year, posted a notice on its website claiming that as of this evening, China time, it will block all access to users with mainland Chinese IP addresses. And Beijing, Mars Cloud Mine is also enacting a block on mainland IPs, claiming that it is paying attention to developments and relevant policies, and was attempting to ensure the continuous operation of the platform. BitDeer's own statement was almost identically worded in parts, with references to actively cooperating with regulatory sentiment and acting in order to ensure the compliance of the wider mining industry. BitDeer will block all IPs from mainland China to further ensure that the platform does not provide services to residents of the mainland. On Twitter, one user claimed that only IP addresses were currently being geo-blocked, meaning VPN users from the mainland were still able to use Mars Cloud Mine services. The multi-coin capital partner Beijing offered some analysis, writing that short-term pain is inevitable, and conceding that mining regulation was going to impact the market, with a real danger of miners' potential capitulation. But, she added, the development could involve a changing of the guard for Chinese miners, rather than the end of Chinese BTC mining as we know it. Observing a systematic paradigm shift from the retail whale to the institutional whale. The difference between the two is not the current hash rate holding, because both could have big hash rates under management, but the ability to hedge and manage financial risk and the access arbitrage. Regardless, there can be little doubt that China is now gunning for crypto miners, if not because of its disdain for crypto per se, but out of fear that it is too far behind on its goal of reaching carbon neutrality by 2060. As previously reported, Beijing has been leaning on some of its most highly coal-power dependent regions to slash their carbon emissions, with a large spike in anti-mining rhetoric in recent state-run news releases. Some will claim the writing has been on the wall for some time. Hotbeds of mining operations like the Xinjiang Uyghur Autonomous Region were told to fall into line with carbon emissions targets earlier this year. And one of these has now responded, with a draft proposal from the Inner Mongolian Autonomous Region, IMAR, comprising 8 measures that would severely limit the options of most large-scale miners in the region. Republished by NBD, the proposals include criminal prosecution for energy providers who fail to declare they are providing power to mining firms, and the removal of special legal status from crypto miners posing as big data centers. Interestingly, the draft measures, authored by the Policymaking IMAR Development and Reform Commission, also contain a proposal to shut down internet cafes and PC gaming rooms that have repurposed themselves as smaller mining centers, a practice that has become increasingly popular in the wake of the coronavirus pandemic. The anti-mining rhetoric has continued in recent days, with one Xinhua report carrying claims that market volatility is likely to ramp up power consumption yet further in China. However, there are suggestions that Beijing's efforts to rein in its power consumption to meet carbon targets are causing disruption in China. Analysts see seismic shift in Bitcoin mining amid Chinese crackdown. Green investments help Bitcoin miners amid possible regulatory crackdown.